To avoid 1031, you need to not only redeploy all the cash, but you need to redeploy all the debt. And so if you want to redeploy 1.2 million of debt, you can't just put down 400K, because that would be like getting 75% leverage, 1.6 million for, and it was more like we were going to have to come to the table with like 600 to 800K of cash. And we didn't really want to do that.
So I'm curious, what's your understanding of the deferred sales trust? This is what we specialize here at Capital Gains Tax Solutions. And then let's talk through that challenge you were thinking that it was, and let's see if we can solve it here with the debt over basis.
So I didn't look into the deferred sales trust. I looked into the Delaware statutory trust. So okay. Do you want me to go down that route, or does that
down that one? We'll go that one, and then we'll weave in how the deferred sales trust can help. Yeah.
So we sold an asset in November of 2023, and our equity to debt ratio was about, let's just use 2080. That's about exactly what it was at, 400K to 1.8 million. So pretty darn close. Okay. And trying to figure out what to do. The problem with that time of the year was that, debt to equity, like because rates have gone up so much, the debt service coverage ratios, I could no longer get, well, let me take a step back. To avoid 1031, you need to not only redeploy all the cash, but you need to redeploy all the debt. And so if you want to redeploy 1.2 million of debt, you can't just put down 400K, because that would be like getting 75% leverage, 1.6 million for, and it was more like we were going to have to come to the table with like 600 to 800K of cash. And we didn't really want to do that. So now all of a sudden I had boot likely, right? Even if I put all my cash in, I was going to have boot. And boot is a taxable thing. So then I started looking all the way around Delaware statutory trust. I looked into that. And then when I learned in that process, again, my novice learning, so you can correct me, hopefully, it seemed like those products are even less levered than a normal multifamily deal. So I was even have to put in more cash. And if I didn't, the returns just weren't what I wanted them to be. And I had a business partner, and he was like, no way. So ultimately, the deal we ended up doing was a deal where we got 900K of debt, and instead of the 1.2 we needed to place. So, and we placed all the cash. Or we placed most of it. So we're going to have some boot on the debt replacement in the amount of like 250, because we weren't able to replace all of it. So I hope people caught that, but that's what happened.
Yeah. Okay. So I'm gonna make sure I unpack that a little bit more, and we kind of solve this for people. What Mark's referring to is it's called debt over basis, and Mark's exactly right. And a 1031 exchange has got to be equal or greater value that you purchased for, and also replace equal or greater debt. So for example, if you're selling an asset that has a $3 million sales price and has $2 million of debt, well, then on the next property that you purchase must be at least a $3 million sales price and have at least $2 million of debt. What we're seeing is interest rates are going higher and higher, and debt coverage ratios for banks are getting tighter and tighter, meaning they're not loaning as much. And so Mark is probably finding himself in a situation where A, he doesn't want to take on that much debt. B, the banks aren't being as flexible as they used to be. And C, he's in kind of an inverse situation where he has mostly debt and not as much equity, because he did what's called a cash out refi, which is great when you do it because it's tax free. Yeah. But then when you find yourself, when you're selling, a lot of that can get recaptured and or just catch up with you, right? And then it's considered boot. And so what we do here at Capital Gains Tax Solutions is focus on building what's called a capital gains tax exit plan. And we use multiple strategies to solve different problems. So just like you have a hammer to hammer a nail and a screwdriver to screw a screw, they do different functions. And so, Mark, here would be the strategy. You ready to kind of geek out on this for a second?
Yeah, please. Let's do it.
Okay, so what was the exact sales price of the asset?
It was 1.8 million.
Okay. And then what was, you said the exact debt was 1.2, is that right?
Yeah, 1.25. It was 1.25.
Okay, let's use 1.2 to keep it simple.
Okay.
What was the adjusted basis approximately?
Approximately 900 grand.
Okay, got it. All right. So in this scenario, as a sample, if Mark were to do a pure 1031 exchange, he needs to buy something for 1.8 million or greater, and he'd have to have about $1.2 million of debt or greater on that asset. So this is what what I would consider what's called it's kind of like a lopsided exchange or a lopsided 1031, because you have mostly debt and not enough equity. So here's the step. Step one, we send all of the funds with my company, Capital Gains Tax Solutions, to a qualified intermediary that we work with. It's our number one strategic alliance. And all the funds go there, and we set up what's called the best 1031 exit plan. The best 1031 exit plan. Now, Mark, it depends on what you're trying to do. Now, most of our entrepreneur clients are trying to sell high and buy low, and they're also trying not to go into debt when it doesn't make sense, and they're also not trying to get hammered with tax. We call these the three aspects of a best 1031 exit plan. You have debt flow, you have tax flow, and you have cash flow. Most people are just focusing on cash flow, and they have some idea that they have this tax flow situation. That's a challenge because you're in 1031, but now their debt's out of whack and they don't know how to connect the dots. Either way, they know they have problems in each, Mark, but they don't know how to connect all the dots, right? Mm-hmm. And so we got to first solve for your debt. So we send all of the funds to a qualified intermediary, and then we do a partial Delaware 1031. We call them, because that's all they are, Delaware Statutory Trust. And we do what's called an Amazon zero coupon deal. Okay, these are typically very highly leveraged deals, as much as 80% levered, okay, in order to replace the debt over basis. Now, in this situation, you do have 1.2 million, and we're going to use a 20% down payment for that, which is 240,000, which is going to eat up the majority of your equity. However, we're at least going to get that debt out of your name. It's non-recourse debt. All of the cash flow is going back into paying the loan off. It's zero cash flow. But in this scenario, all we're using is this hammer for this debt situation. We're going to get non-recourse debt. We're going to replace your debt over basis 1.2, because the challenge becomes as well, if you don't do that, is that 1.2 over a $900,000 adjusted basis is considered ordinary income tax, right? Which is even worse. So that would be 300,000 of ordinary income tax. So instead, we're going to replace all of that debt over basis by putting about $240,000 down on this Amazon coupon deal, which you take a partial 1031 interest into. Any questions on that first part so far?
Why do you call it Amazon?
Well, it could be Amazon, it could be FedEx, it could be different ones, but it's just a really, really AAA rated typical tenant. It could be Ford Motor. These are most of the times we're doing Amazon, these huge warehouses that Amazon.
Oh, I see. It's actually a distribution center.
Yeah, this is a distribution. Yeah, it's a better way to put it, right? But the key, it's important though, because the key is that that person who's leasing it is investment grade, right? Amazon, one of the biggest companies in the world. Yeah. They're not going to not pay their lease, right? And this is part of why the banks will give that high 80% LTV. Sometimes it's 77, sometimes it's 70, or sometimes it's 80, 85, 82, 83, depending on the deal. But the point is, you, Mark, only have to put 240,000 to get a disproportionate amount of debt replacement, which is the 1.2 million. Now, that's one way you could do it. However, you might say, well, Brett, I want more of my equity.
Well, and can I throw one more thing in there, Brett?
Yeah.
Which is, I still got another 160K of cash that I got to do something with.
Yeah. I'm going to solve for that in a second.
Okay.
Right? That's the cash flow. But I want to make it a little bit better now, right? The only thing you really have to solve for is the debt over basis. Now, your debt over basis, remember I said 1.2 million was the debt. $900,000 was the basis. So you really have a $300,000 debt over basis. So actually what we're only going to do right now is replace your debt over basis. And so we're going to do 300,000 by 20% at 60K. So Mark, how would you like to only have to put 60K of your 400,000 into that Delaware 1031 Amazon deal? Now you have the other 340 that you could put into what's called a deferred sales trust, defer all of your capital gains taxes, okay, and be able to use that equity if and when you find a deal. Okay, so this is what we're going to do. We're going to put 60K into that Delaware 1031. We replace that 300K debt over basis. The rest of it, though, if you were to do a rest of a 1031, you have to replace that rest of that debt. But in this scenario, we're able to put the rest of the equity, about 340, into the deferred sales trust. And because it's a partial installment sale and a partial 1031, you're in a 100% deferred state at this point. So we do these constantly. It's called a bifractured 1031 exchange. And so you don't have to replace the full debt, only the debt over basis, and you don't have to do a full 1031. And this is the beauty of the deferred sales trust. It allows you as the entrepreneur to buy whenever you want with that 340, to not have to go into debt that you don't want to go into, and to diversify the wealth. A lot of our clients are putting into T-bills or hard money lending for a period of time until they find a deal. So I'm going to pause there. But if anyone wants to learn about that, you can go to capitalgainstaxsolutions.com. You can also go to experttaxsecrets.com to learn more about that.